What's up, people? In this video we're going to be talking about backtesting. Whether you're a new or experienced trader, there's so many courses out there telling you, oh, I can make you £1,000,000, £1,000, whatever, 10x your money, 100x your money in a short space of time. But how do you know these claims are valid? You backtest it. So in this video I'm going to be talking about what backtesting is, why you need to use it, and how you can go about doing it. As you can see here, this is how I backtested GPPJPY. As you can see here, I backtested GJ for 2019 just to see if the vertex method worked. And I'm going to go through a little bit how I backtested it and the data that I got from it. So without further ado, let's go. What's up, people? It's Any, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. Now, I don't know about you guys, but I've always been one to rush into new strategies once I master them. I'd always try and learn the strategy as quick as possible and then just get straight into demo trading. And then once I got confident with the demo trading, go live. But there was a vital step that I kept missing, and that was backtesting. And I avoided it like the plague just because I didn't want to do it. But it's probably even more important than some of the live trading you're doing, because once you get the confidence to understand the strategy by knowing it's worked over a long period of time, then you can actually, as I said, be confident in the strategy and use it going forward, knowing historically how it's done, which is why backtesting is so important. But before I go into how I backtest, what's the definition of backtesting? So rather than me butchering the definition myself, let's go to the trusted Investopedia. Backtesting is the general method for seeing how well a strategy or model would have done ex post. Backtesting assesses the viability of a trading strategy by delivering how it would play out using historical data. If backtesting works, traders and analysts may have the confidence to employ it going forward. It just kind of goes on to what I was saying. Backtesting builds confidence by testing historical data to see if the strategy you're employing works. So there's two ways you can backtest. You could do an automated one or you could do a manual one. I don't do automated backtestings. I just get into the manual backtesting because that's just the way I do things. So that's what I'm going to show you in this video. Quick side note, Hannah Forex. There's this Forex trader called Hannah Forex. She has this great video called Backtesting with Me Again. It's about a month old. Well, depending on when you watch this, but this was released around December 2020. And she just goes through how she uses Notion to backtest. She's got a couple of videos on this, and that's the basis of how I use Notion. I watched these videos and I adapted it to the way I wanted to backtest. And I think Notion is a really good tool to learn to backtest on. So I'd encourage you to watch these videos after you finish watching my video, of course. But yeah, just thought I'd give you a quick side note as to where I learned how to backtest using Notion from. So as I was saying, I've learned a new strategy, but I want to make sure it's robust. So what I did was that I set up an account on Notion. So in this Notion's account, I backtested the pound versus the Japanese yen 2019. So I backtested 1 year at a time, and this is just an example of how I laid out my data. I used the FX pair, so that's the pair that I'm backtesting. That's the open date, close date, position type, so whether it was a long or short. The risk was I'd always show how much risk to reward I'm trying to get from that trade, what session in which I entered that trade in, whether it was London, Asian, or New York session, and then the results, what actually came of this trade. And then I'd also put confidence, so kind of what reasons I took these trades, so whether it was a point of interest in the hourly chart, 4-hour chart, daily low, etc. So just to see if there's more confidence, if there's more likelihood of the trade being positive. And as you can see, the more confidence I got, a lot of times the higher reward I'd get on, or the more likely the trade was to kind of pan out. Sometimes it didn't, obviously, but it looked like when there was a lot of confidence, there was higher chance that the trade would win. Now, and then I also added screenshots. So what the good thing you can do is that you can, with TradingView, you can always take screenshots here and copy it. So I'd copy the TradingView screenshots and I paste it into the screenshot area. So every trade I had, I've got a visual representation of what happened, so I can go back to it and look at it. So for example, let me take this one. So this is a 12.73 risk to reward that I gained from this backtested trade. I opened it up here, and then it shows me exactly where I entered, where I exited, and why. So obviously I entered here because there's a 4-hour point of interest. It climbed pretty smoothly up, and then it found a little bit of resistance here because there was like a kind of point of interest here. It came down a little bit, but then shot up all the way up to the weekly high. Took a 4 or 5 days. But yeah, 12-hour trade. And obviously you can do that for, I can go through all of these and just look at what the visual representation of that trade is. Here's another one, and yeah, it was a short taken at a point of interest here, and straight taken to the breaker structure. Let me show you one of my losers. So this was a loser, and even this loser, I was actually right. It's just that I set my stop loss my stop loss got broken, but then it ended up going in my direction. So this one, there's not really too much not too much to learn from this one, because I was right. It just happened that it wicked me out just before it started moving in my direction. So just one of those trades. But it's really good to be able to visually see what trades you took and what how they look like in terms of market structure. You can also go to the weekly winner view here, and what you do is that the way it's been set out here, I can look at all of the trades that were winners and then just see how they looked on the chart, and it gives you just like a kind of like a layout of all the different winners in one sheet, so you can look at all of them at once just to see if there's like a consistent theme in the way that they're set up. I also put here stop loss distance. So I think this is important because as I'm getting better at refining the strategy, I want to make my stop losses tighter so that I can increase my risk to reward. So initially my stop losses were like 20 pips, 30 pips, 55 pips. So as I go along, this is obviously the first time I was testing it, but as I go along, the idea is that I want to iteratively reduce my stop loss to increase my risk to reward, and I want to see how that affects my profits over the long run. So I might retest this whole year again, but then maybe make my stop losses smaller, which will mean that I have a couple more losses probably because I'll get stopped out, but the wins will probably be higher, and see if this number can change, because based off of the analysis of that year, there was 102% risk to reward. Obviously, it doesn't account for the emotional aspect. Some of these trades you might have wanted to take partials early. This is under the assumption that no partials were taken, but this was part of how I refined and learned how to see that this strategy worked, first of all. Now, one thing I want to say is that when you're backtesting, you want to get at least 100 trades. Now here, there's not up to 100 trades, but I backtested some more. This is just only 1 year and 1 pair. So you want to backtest maybe a couple of years on 1 pair, and then maybe move to another pair a couple of years. But I wouldn't say go further than maybe 2-3 years back, because after that, I don't know how relevant the data is to today's trading. So I'd say go 2-3 years back and backtest, and plot out what you see, and then paste them here, and then you can see how much returns you would have got on each year. As you can see here, one of the other strategies that I backtested, this was backtesting for 3 years on 1 pair. So I backtested the DAX on this one strategy. I'm not going to show it to you because it's one I've been working on, but like it showed that there was profitable three years in a row, but there was only a few positions that you could take each year. So it's one of those strategies that you might be sitting for 2 months until a setup is available, which is why I didn't really like that one, because you'd be sitting on your hands for quite a long time. So once again, back to GBP JPY. The way I did was that there's this thing called the replay tool. You have to have a TradingView premium account to be able to replay. So you might have to pro account, so you might have to pay for it, but it's really useful. So guys, I'm going to give you a quick run through of how I would backtest one particular trade, and then I'll show you how I log it. So just give you the beginning to end process of what I do to backtest, just so you can see how I go about it. So I found this is GBP JPY again. This is a 2018 trade. It's making lower lows. This is like a pretty straightforward trade, so I thought I'd use this as an example. So first I'd plot my point of interest area. So it's going to be around here. I also use my 180-day simple moving average as a also form of confluence, so that if price is above it, it's curving down. It shows me that price is most likely selling off as well. But yeah, so I'm on the daily chart. I've plotted out my point of interest. I'm going to go to the 1 hour chart now and see if I can refine it even more. I use this little thing called that blue line is like my sniper entry. That's where I'd want to enter. And then let me go back to the 4 hour chart. I would set a short on this line, and then set my stop loss maybe just above this high. It's quite high, that stop loss. I don't know, maybe set my stop loss like 40 pips. I'll do it 50, and then I'm not sure where my take profit is yet, because I want to know where the most recent structural low is, so I'll change that one if I need to. And let me just move this a little bit longer. So now I'm still on the 4 hour chart. Now what I do is that I'll just press play and see how it plays out. Okay, so this is the most recent low so far. So right now that'll be 11-1 trade if I get tagged in. So far, not been tagged in. Computer's freezing, great. So great, I got tagged in, but I set my stop loss a little bit too tight, and I'm in a loss. But let's play it anyway. This is still learning curve, so it's good why you do these things. So then I can look as to why I took this loss. So the trade went the way I wanted it to go, but I just set my stop loss a little bit too tight, and I got tagged out just before it moved in my direction. Learning curve. This is why you backtest. So then maybe I can. So then what I do now is I'd screen grab this, press that button there, copy it, go into my the folder. Now I've got a folder for GBP GJ. I haven't got a folder for it, but let's say I did. I'm not going to create one now just for it, but I'd create a new on this one, and I just log it. So I log it here. You guys can't see it. I log it here. So I'd go GBP JPY. I put the date there. I put the time there. I put the entry date and time there. I put the exit date and time there. I'm not going to do that now. It was a short trade. The risk to reward was 11.08. That was the potential risk to reward. 11.08. I'll put that in later. I'm not sure what session I entered in. My loss was -1 R. And then I can see the confluence. So the confluence of this trade was that the confluence was that I saw on the 4-hour chart, on the daily chart, it was selling off. On the 4-hour chart, on the daily chart, this was the point of interest. On the 1-hour chart, there was a point of interest as well. Price was trending down, so there's quite a lot of confluence. So I'll say daily, 4-hour, there's an inefficiency gap here. There's an inefficiency gap here, so that was also of interest. Yeah, so I'll put those two. I'd paste the trading view link here, so when you can click it, you can view it, as you can see. And then I'd put a note as to what happened. So set my stop loss too tight. And then what I do is I open this bit here, and then I would also put my pair here. Put the session there. I'm not going to put session right now because I can't be able to work out what session it was in. And then I would also paste the image here, the same image here. I'd paste it here, and whatever note I'd want to use, I could put in the caption. So I could just say set stop loss too tight. So then all that information will be here. Obviously I didn't put all the information in just because I was being a bit lazy and I didn't want to work out what session. Actually, let me just do the session. Let me just do it. What session is it? So what session did I enter it at? The green one. So the green one would be so it entered in the London session. Date and time, you can do that yourselves, but I'm going to delete this anyway. This was just to show you guys how to log your trades with TradingView. I hope you find this useful. It's Any, aka the NocTrader, signing out.